It's the 1st of January 2018. I haven't done many videos on some of the smaller gold producers of late. They've been very stagnant and sort of downtrending. Not a lot to talk about necessarily, not a lot of fundamental news. But I think now there's been sort of in the last 3 or 4 months, some of the junior producers that I hold or previously held have had some interesting developments. I thought I'd talk about a few of them. First one is Remelius Resources. I was bullish on this stock a couple of times last year, made some very good money on it, and then lost a bit of money on this downtrend here in mid 2017. It's struggled to sort of get a lot of the gold stocks, these junior gold producers got really pummeled in the GDXJ rebalance event, which was this move in April. And that they kind of never recovered there. You can see just the complete lack of volume, and I showed this in the video I did the other day with the GDXJ chart in it. But Remelius's volume is back to levels not seen since 2014 there for the last 3 or 4 months. So, but in the same time, I don't think their operational performance has been that bad. There were some issues that justified maybe a little bit of this fall into the 50s, but past that, I think it's overdone. And they did have that Edna May acquisition. I like this, which I'll talk about in a second when I look at some of their presentation, but I like this little bottom here once it's dropped past this support at 36.5, 37 there. And then there's been some nice large volume days that have come in, and then the share price has been boosted back up pretty quickly. One thing about Remelius that is an issue, this is one of their latest presentations, I think, from the AGM. But you can see here their major shareholders, they lack sort of that institutional. So Van Eck is just the GDXJ, so that's not really an institutional holder. That sort of comes and goes as the the speculative interest in the gold market does. Ruffer has been acquiring stakes in a few of the sort of lower quality junior gold producers on the ASX, and don't seem like they're the type of company to trade in and out of it. But after that, they've got no one more than 3% of the shares, and that's a real issue. And I think that's one of the reasons that some of these companies are able to their share prices sort of march down when the speculative interest disappears. There's no one there to come in and sort of take up value buying opportunities, which I think is what's been happening in some of the larger Australian gold producers. When they get hit, you'll find that some of the local institutions are willing to pick up those shares because they just view them as a higher quality company, which is fair enough. Remelius does have some mine life issues, but they've proven that they've been able to overcome that, and replacing all their reserves that they're mining. One thing, so I bought back into the stock. I think when this presentation came out actually, and I read this, I bought back in at 38 and then bought again at 33. But this line here in the October estimates of production, they really cut the costs considerably in just 1 month. Whether that's a guide for the rest of the December quarter, we'll have to find out. But I think it's probably a pretty positive sign that they're likely to come in much lower at Edna May, because Edna May's costs under evolution were much higher. You can see here also their production profile going forward in the next sort of 6 months is really positive. And the overall company production profile, this is a very good time to be buying the stock, I think. I mean, companies, even though they have a short mine life, the market tends to always be placing sort of most recent production figures at the front of its mind, in my experience. So if they can hit this target here of $1,000 costs, all-in costs, and 60,000 ounces produced in the June quarter, for example, I can't see the stock being valued at under 40 cents. It just doesn't seem right, even if they're only got a couple of mines with 3 or 4 year mine lives. And I think some of the hopefully that's maybe the catalyst for some institutional holders and some larger investors to take another look at Remelius, and then they can reinvest some of that cash into their exploration budget. They've generally been relatively successful there, and as I said, and they've also got some good hedging coming in, I think, in this March and June quarter. I think sort of maybe $1,800 per ounce Australian, and match with the I think it's about 16.70 the Australian dollar gold price at the moment. So if they're producing gold at $1,700, that's a $650-$700 margin there in June if it comes to fruition. So that's very good, and that'll be $30 or $40 million of free cash flow, and you're not going to get, the company won't be valued at sub $200 million at that on those numbers. But so I'm in Remelius now, and I'm pretty positive on it as a very good sort of value buying opportunity with a limited downside risk, I think, in the short term. Edna May being an existing operation, I think, is probably unlikely to have many sort of skeletons in the closet as something like a brand new operation, which something like Perseus has. That's another company I wanted to talk about. A few people have asked me about it. I've been pretty negative on it recently. One of the reasons for that is that any time a company brings a new operation online, which they're doing with Sissingué in Côte d'Ivoire at the moment, that's always a danger period. I mean, if you go back and look at, feasibility costs are always a problem because they're constantly very optimistic, and when a mine actually comes into production, they rarely actually hit the feasibility numbers. And Edikan, I actually went back a few weeks ago and looked at what the original Edikan feasibility study, predicting sort of $500 or $600 cash costs, I think it was. And Edikan has never produced, that's US dollars. Edikan has never produced anywhere near that, and currently producing at about 1,000 or 1,100 all-in costs, and maybe trending a little bit down in the December quarter. But that's just an example of to be wary when new mines start up production. So Perseus, I think Edikan's probably a relatively known quantity now. I think they're getting gradual increases in grade, so the costs are dropping. There's not going to be any major falls there, but I'd much rather own something like Remelius, for example, because I just think they're in a better position at the moment. They don't have that potential warning of problems at Sissingué. Maybe Sissingué comes online very quickly, without any problems, but that's more and more of these companies are struggling when they're actually going into production at new mine sites. So I'd like to see some, and that mine has had that. Some of the feasibility numbers have been gradually downgraded, and that's always sort of warning signs to me. If you don't want to see companies sort of building mines when things are gradually getting worse in their estimates, and I think maybe they're starting to sort of, they might be gaming some of the feasibility numbers to justify building it, and I don't want to see that. But Edikan produced 51,000. I've highlighted there in September quarter. They still maintain their guidance of 110,000 at the minimum end. So they're going to need a 59,000 ounce quarter, which I don't think they've had for quite some time. And they did the grade. They said here the grade did pick up in the month of September to 1.3. So they've got sort of about 12% increase in grade there. 13% higher, it says it there. And but they need a 20% increase in production. So that trend is going to have to continue. They haven't warned the market of that they're not going to meet guidance. But I'd be very surprised if it was any more than 112,000 ounces, for example, and that would probably be welcomed pretty positively if it was. And there's a general trend there of increased production. I think the grade is, picking up for the next maybe year or so. That's a year or two. It's a very good period. So based on their feasibility numbers, that is. But they've gradually improving things. But this is a pretty mature operation now. It's been going for 4 or 5 years. So I don't think they're going to be pulling rabbits out of the hat and getting costs down and another 20 or 30%, even if the grade does pick up. But yes, I'm just a little bit wary of Perseus as someone who's owned the stock on and off for 5 years. I know that they've struggled to hit targets, and operating a new mine has not been something they've been great at. Maybe it keeps going well, but if gold picks up well, I want to be in something that doesn't have company issues. That I want to be riding that gold price wave, and I think Remelius. And the other stock, Silver Lake, I think is another one that I'd probably prefer to own over Perseus. That Silver Lake's just been battered for the last 9 months. But this, I own this stock mainly as just a play on the gold price, particularly Australian dollar gold price, because it is the most volatile trading sort of stock, and it has, I think I wrote, it has, the most euphoric highs and the most depressing lows, and that's what we've seen at the moment. There's just been this complete and utter, depression in the minds of shareholders. Um, but previously, you can see in here, even in 2014, it's had that's about 100% run from the lows. 2000 and again in 2015, another 150% run, and then this run in 2016 and again in 2017. Sort of that was a 60% run there. At this point, I was extremely bearish on the stock. I didn't think it was valued at 80 cents. I'm not even sure how it got to those levels. It was completely unjustified in my mind. But at 35 cents, the stock is way oversold, and I think it can easily get back to sort of rally back to that 50-cent level, which is sort of in line with, if it had one of those 50 or 60% rallies, which it has done for a long time. And their costs are relatively well known now. I don't think they've got a good cash balance as well. I think they've got about 70 million in the bank. They're not necessarily having a lot of free cash flow. They're putting money into development of their new pits. But I think that period is probably for the next maybe 6 months, and then they'll start to see some fruits of that investment and get some good cash flow. They're starting to be a bit more bullish and talking about looking at potentially other investments in other operations, or maybe in some exploration companies taking a stake. But I'm generally relatively positive on the stock now. I think it's just mainly on a valuation point of view. I think it's completely overcooked here on the downside, and I think a rally is in order. So I've kind of been buying the stock on the way down, which I don't like to do too much, but I think fundamentally they're probably in the best position they've been in for 3 or 4 years. So being at this share price isn't really justified. So I think the market will probably pick that up as well, and they might start to come back. I'm not expecting their December quarter to be great. They've even sort of said that they're not expecting a lot of free cash flow in the short term. So I own that as well. Medusa's the other one that I talked about in a video maybe 6 weeks ago. Since then, it's really held its own, sort of pretty flat, which has been probably a pretty good result compared to a lot of the other smaller gold miners. It's been probably one of the stronger ones, holding its levels. The big end of town's been going up and the small end's been going down, but Medusa, the volume's really dried up here. This stock is probably one of the most tightly held gold stocks in the smaller end. Ruffer, who I mentioned before, who are in I think they're in Remelius and also in Perseus as well. I think they've been buying the stock, and also Arbiter, which is I think a hedge fund out of New York. They've been buying too, and they own, I think, collectively maybe up to 30% almost of the company. So it really does have quite a large shareholding locked up between those two institutions, and they haven't shown that they're likely to sell down in the short term. And I think, I'm looking for the September quarter numbers were their best by far, which is when I bought in here, and they rallied strongly. December, they've sort of cautioned that it might not be as strong, but I think even if they can keep their costs in check and sort of in that 1,000 to maybe up to $1,100 an ounce, and keep their cash balance strong with that new shaft coming online in April, May, I think it is. I'm really expecting this stock to do well in 2018. I think it could be one of those sort of turnaround stories. I previously compared it to something like Resolute. They haven't got quite the production profile of Resolute, but I think Medusa is valued at less than $100 million down here. Something like 85, 90 million Australian dollars, which is just ridiculous. They've got really high grade, hard to mine, narrow vein, but I think they'll start increasing their exploration spend, and maybe they can get their reserve life up. And with that new shaft coming online, I'm looking for maybe a 25 to 30% increase in production, and that's going to be a material change in this company. And I don't think anyone really has been following that. So I'm looking for this stock. I think first stop is that sort of 60-cent level. Hopefully, if they keep after that December quarter number comes out and that soothes the market a little bit more, It hasn't been running much in the gold price. It's not in any of the GDXJ, for example. Medusa's out of that fund and has been for 3 years, I think. But I think it'll start to get some attention. And with that, it's only got 200 million shares locked up. 200 million shares on issue, and a lot of them locked up between those two large holders. I think when it runs, it'll probably run very hard. So that's why I own it. And I bought some more at about 40 cents after that initial entry at 30. But I think if it keeps around these sort of levels, I might look at buying some more. But I'm pretty bullish on this as a general recovery story. I mean, sometimes you got to look back at these companies and where they once were. This was once an $8 stock, and it's fallen so much that the recovery, and that especially this. If you go back and look at the video, I talked more extensively about this in the November. I think it was November 19. But this 6-month move here, just no volume and a complete just straight line across there. That's really bullish for me in forming a base. And this looks like it could be a base sort of for a real turnaround move. And I expect that with those production numbers getting better, the charts will gradually start to reflect that. But potentially maybe this is a double bottom. If we can, it's even hard to scale it here. It's been so beaten down. But if this is your double bottom here around this sort of 30-cent level, just get it up to there sort of level, like longer term, maybe something in that $1.30 sort of range, I think could be a justified valuation if they can start hitting their production numbers. Say if they were able to get to 130, 140,000 ounces a year, and those costs were to drop sort of to $800, $900 an ounce, and we had some pretty positive gold price action. This is the sort of stock that can get to those levels. So yeah, I'm really positive on it, and looking for much higher prices. So they're 4 stocks that I've been following for a long time, and I own 3 of those. I own all of them except for Perseus, and probably I'll stick to the other 3 for the moment over Perseus until I hear about Sissinge. But yeah, so that's some of my thoughts going into 2018.